Hi everyone, my name is Kaustubh Kale. So I have always told you that whenever you are investing in any product, always ask what is the expected rate of return that you will make by investing in the product. It basically means the IRR, the internal rate of return, the intrinsic rate of return, the compounded annual growth rate. By staying invested in the product, आपको exact return कितना मिल सकता है. Going forward, you can try and ask another question. The second question that you can ask is, you can ask the seller what is the commission or what is the percentage that that person is going to get by selling you the product. So two questions. एक तो investor को क्या benefit है, second is product seller को क्या benefit है. You can ask these two questions. We'll try and understand this with a comparison here between an LIC product versus a mutual fund. This will help you understand the concept much better. So yes, we are here in the table. Now I'll give you some context of the table. What we are basically going to compare is what is the investor earning by investing in an equity mutual fund. Okay. And then what he'll earn if he invests in an LIC product. Similarly, the agent who's selling you, what will he earn by making you invest in an equity mutual fund, by selling you an equity mutual fund, and what will he earn by selling you an LIC product. So let's try and understand here. Okay, equity mutual funds will give you anywhere between 11 to 15% return in the long run. Okay, so 5 years, 7 years, 10 years, 15 years, इसमें lock in भी कुछ नहीं होता है unless you go for tax saving schemes, but 11 to 15% is what you will earn on a compounded annual growth rate basis in the long run. Okay, so here I will write 11% is what you will earn on a conservative side. It can go 12%, it can go 14%, it can go higher also. Now in a LIC product, if you calculate the IRR, the intrinsic rate of return, आपको उन लोग बोलते हैं correct that you invest for so many years, you invested 10 years, 12 years, and this is what you will get at the end of 15th year, 16th year, 25th year, anything of that sort. If you try and calculate the IRR, it will come anywhere between 5 to 6.5, 7%. Okay, so on a conservative basis, let's consider 6%. Now 6% actually I've considered some cases it is as low as 5% also, but we'll still take 6%. Now coming to the agent. Okay, now coming to the agent will, if he helps you invest in an equity mutual fund, it's around 0.6% on a blended basis is what he'll earn for the first year and the subsequent year as well. Okay, so it will be 0.6% for an equity mutual fund. For a debt mutual fund, it is even lesser. So we are talking only about equity mutual funds here. So it's 0.6%. Now when an agent sells you an LIC product, he earns anywhere between 20 to 30% in the first year. So here you can consider it as 20% conservatively, and then in the subsequent years, I think some plans give 7%, some plans give 5%, some plans give 2%, but we'll consider 5% on a broad basis to understand. Okay, on a blended basis. Now here the point that I want to tell you is that if you invest in an equity mutual fund, as an investor you are earning 11% and the agent is earning 0.6%. But if you invest in an LIC product, the tables turn because the investor is earning 6% while the agent is earning 20% and later on 5%. So if you compare it as a partnership, if you consider it as a partnership, you will realize in an equity mutual fund, it is very lopsided towards the investor. The investor is benefiting. But when you consider it in an LIC product, the agent is benefiting more, or in fact, the share is significant. So from that perspective, that is why we generally say that LIC products are sold to you and you don't buy them. While an equity mutual fund, a smart investor goes and buys or invests in an equity mutual fund. Now you may tell me that here I am also getting an insurance cover in an LIC product. We have always told this in our previous videos as well, that if you want to buy an insurance cover, then go for a pure term insurance plan and not for an investment plus insurance plan. Okay. Now if you are considering that मुझे insurance cover चाहिए, तो the agent should ideally sell you a term insurance cover. Okay, and the balance amount which is left by buying an inexpensive, cheaper term insurance, the balance amount that is left can be invested in an equity mutual fund for the same tenure, because whether it is an LIC product, whether it is an equity mutual fund, the tenure is long term, correct? 5, 7, 10, 15, 20 years as well. So that is why. And once you buy an insurance, whether it is a health insurance or a life insurance, pure term insurance cover, we recommend you consider it as an expense and not as an investment, because it is an expense to have an insurance, have a hedge against your savings and investments, and your financial goals. It is a hedge, it's a cover, it's a protection, it is something to safeguard. So insurance is an expense. Life insurance, term insurance, or a health insurance is an expense. So when you buy an insurance plus investment product in a LIC product, understand that the agent is earning more than you, while in an equity mutual fund, you are earning more than the agent. So this is something that is important. It's an important distinction and comparison that you have to always do on the investor versus agent. I hope this was useful as well as interesting. Thank you so much, everyone.